Good afternoon, everyone. I'm Tay, and we're Team 12. Imagine that you're waiting for your Christmas gift. You might be really excited. At this moment, however, expectations might be the silent killer. And today, we are revealing the silent killer, CJ Express. Sean, Mr. Cochran, sell the stock. We are suggesting the target price of 142,000 Korean won with downside of minus 20%. In fact, the stock price has been falling after our initiation on October 14th. If you have listened and followed our set position, then you'd have made a 15% of profit as of today. However, we maintain our sell recommendation because still the current price multiple is 38 times, and we believe this high multiple comes from the expectations which are not realizable. So now, we'd like to show the 4 reasons that will shatter the market expectations. Industry that has entered re-rating phase, price with improbable same-day delivery service, disappointing cost reduction, and finally, unreachable expectation on global division. Briefly, CJKX is a total logistics company with 3 operating divisions. As you can see, the main spearhead of this company is Courier Service and Global Division. Now, let's obliterate the expectations. First, industry that has entered moment to re-rate. People expect this industry would grow further, but you should be informed that this industry has been saturated. The courier service industry has been growing depending on the rise of online shopping industry. As you can see, the portion of mobile shopping out of total online has increased drastically from 15% to 55%. In return, market granted high multiple valuing this rapid growth. However, the growth rate of this industry has dropped to astonishing 3% during the last 2 quarters for the very first time ever. So now, it's time to re-rate the growth potential of this industry. Next presenter Wine will discuss price part.
Thanks, Tay. Now we are moving on to price. We believe that there is no chance to raise the ASP of courier service, which is the opposite from the market expectation. This is because, first, in this industry, all top 3 players are immersed in a price war to gain market share according to our sensitivity analysis. In addition, consistent capex plans of the company implies that this competition will not end easily. In this situation, the only catalyst to increase the price in courier service division is the same-day delivery, which can raise the average price by 20%. CJKX is building the new mega hub terminal inside the capital area and plans to operate it from the year 2018. We estimated that the new hub will process approximately 38% of the total capital area's volume, reducing time and distance. Even though the delivery time is decreased from 24 hours to 10 hours, it does not guarantee the same-day delivery. This is because if you use CJKX, regardless of time of order, the cargo collection will commence at 6 p.m. and only after the sorting process, the courier can start the delivery. However, Amazon or Korean online shopping mall Coupang is providing the same-day delivery if you order before the cutoff time. This is possible because the courier can start the delivery as soon as you click the buy button. Because they already have the inventory at the right place, they can eliminate the cargo collection and sorting process. That means inventory is the key to same-day delivery. However, CJKX should not follow the Coupang's business model because they have technically failed to continue its service due to high inventory and labor costs. And also, CJKX cannot adapt the demand anticipation system of Amazon because Korean conglomerates does not want to reveal their information. Therefore, we believe that ASP increase generated from the same-day delivery is not possible. Now, our next presenter, Jungjin, will cover the cost.
Thanks, Wine. Now, I'm going to elaborate on the cost saving of the new hub. First, the automated loading process is expected to substitute all the part-time workers. As a result, it will reduce 1.4% of the cost per box. Second, the new hub will eliminate in the average 1 of 3 handling process, which will reduce the cost per box by 1.5%. However, by our analysis, CJKX will secure only 70% of market expectation. Therefore, we believe that the cost reduction effect from the new hub is disappointing. Now, we will look at the global division. The market is buying the stock at a premium for the potential M&As and CJ Rockins earnings. However, there should not be any premium for the potential M&As. We divided the global logistics company, one with frequent M&As and another without. Our comparison chart shows that the market does not value potential M&As and this should hold to CJKX. Second is, CJ Rockins earnings are overestimated. We conclude that the synergy effect between CJ Rockins and CJ subsidiaries would be only 39% of the company's guideline. In addition, the growth of Rockin alone is not expected and will not outperform the market growth because of unfavorable market conditions of Chinese industry. Therefore, these two facts show that the global division cannot explain the current multiple level. Now, our next presenter, Kyung-won, will cover financial analysis and valuation.
Thank you, Jung-ji. CJKX is a good company, but a bad investment. This derives from the increasing profit, but the higher market expectations. First, let's look at the bright side. The company earnings grow more than double in 5 years. The fundamental causes are the growth in courier service division and cost reduction from the new hub. This will increase ROE to 5.2% by 2021. Looking at the dark side, its current PBR is 1.44 times and PER is ridiculously high, 38 times, which we believe is overvalued. To confirm that, we used DCF valuation. We applied 1.5% of terminal growth rate and 5.5% of WACC, which was calculated with bottom of beta. As a result, we could derive the target market capital of CJKX to 2,830 billion won. On top of this, we calculated the value of each subsidiary independently and aggregated them individually. Finally, we could derive the target price of 142,000 won. In order to validate our valuation, we also used relative models. Applying the PBR of 1.09, the target price equals to 141,000 won. And the difference is less than 1% from our DCF valuation, supporting our sell recommendation. We have also executed bull case valuation to know under what conditions our recommendation will change to hold. It assumes the higher market share of courier service division and bigger synergy from CJ Rockin. If these conditions were to be met, our TP will be adjusted to 190,000 won. However, we believe that these figures are unreachable, so we will remain with our sell recommendation. Now, our last presenter, Jin-gun, will introduce you to the risks.
Thanks, Kyung-won. Today, we are focusing on upside potential, which might be risk to our view. Our valuation needs to be revised if the CJKX takes over Hanjin's market share in shipping industry. And if the company liquidates its treasury shares, the financial structure would be stabilized. However, we believe that the possibilities of these two cases are minimal. To put things into perspective, firstly, the market predicts the industry has room for growth, but we analyze it has matured fully. Secondly, the growth of ASP is foreseen by investors. However, ASP increase is impossible. Thirdly, the cost reduction will be realized. However, the actual cost reduction effect is not enough to meet the global division will grow from M&As. However, there is no overestimation. With the target price of 142,000 won and downside of minus 20%, we initiate sell recommendation. Thank you for listening, and now we will take your questions.